Hi there folks, welcome to Buy, Hold, Sell. My name's James Marley and I know many of you out there on YouTube are going to be disappointed that I'm stepping in for Ali Selby. We know how much you love her colourful outfits. Here I am in my boring grey suit from 2019. But our episode today is going to be a cracker. We often hear fund managers talking about how they love founder-led stocks. We've got a couple that we think are on the cheap. We're going to find out if our guests today think they are a buy, hold or sell. My guests are Will Mumford from Ozcap Asset Management. Will, welcome.
Thank you.
And Tim Reardon from Blackwater. Good to see you, Tim.
You too, James.
As I said, we're talking founder-led stocks. Let's get started. Tim, I'll start with you. Corporate Travel Management. Jamie Ferris is the founder there. Missed expectations in February. It's really struggled to recover post-COVID. Buy, hold or a sell?
We're a hold. Definitely come back since COVID and heady days of higher multiples. Sort of feel like the balance is okay here. Basically got some consternation about where margins go rather, but with the multiple where it is and a target to double the revenue base of the business over the next several years, feel like it's evenly placed.
Okay. Well, I saw Jamie Ferris bought close to $1.4 million of stock on market. He reckons it's a buy. What about you? Buy, hold or a sell?
I'm a hold, and I think there are some positives there. It's had a great record since it listed, and the travel thematic is always a good one to get exposure to. But I really like simple businesses, and I've found it quite a difficult business to analyse from the outside. And I think there have been a few examples now where both myself and the broader market have been surprised by some of their updates. And like Tim mentioned, that they have put out a target over the next 5 years to grow revenue at 10% and earnings at 15% plus over the next 5 years. But at the same time, they've just had an earnings reset. They're calling out issues in the broader corporate travel market, Israel, a UK government contract. And so there's just too much uncertainty there right now for me to pull the trigger.
The next stock is Lifestyle Communities. It caught the market by surprise with a capital raising, which they hadn't done for some time. Is it a buy, hold or a sell?
Again, I'm a hold for that one, and it gets the hold because the CEO has just put in $10 million into the business. I've only heard positive things about the LIC communities, and also it's a great thematic, well suited to the current housing shortages. But I've got 4 issues here. So firstly, I like businesses that are really cash generative. And because LIC spends upfront on CapEx to then generate annuity income, it's not very cash generative. If you were to sum up its operating and investing cash flow over the last decade, you're left with a negative number. The second point is that their core demographic is the 67-year-old Australian, and on the ABS's projections, within about 5 years, that demographic is in decline as we move from baby boomers into the Gen X. The third point is I think there's an element of regulatory uncertainty with the sector. If you move into one of their communities, you don't pay stamp duty, but at the same time, you can use rental assistance from the government to pay your site fees, or 30 to 40% of your site fees. The final point is that we've now got players like Stockland moving into the sector, and they don't charge their community members a deferred management fee, whereas LIC's currently expecting a deferred management fee of 50 grand plus on all of its sites. And so I think there's risk to that revenue stream longer term.
Tim, James Kelly, who was on a podcast on Livewire not that long ago, he said they're seeing more opportunities than ever before to buy land at attractive prices. Is it a buy, hold or sell for you?
Yeah, we're sell. We've followed James for a long time and think that he's done some really special things, particularly the culture of the business. Real proponent for the industry. Will touched on competition. I think that's been an issue that has perhaps contributed to what was really quite a poor result in February. A bit of a surprise in terms of the delay to settlements, which put a lot of pressure on cash and the balance sheet for the business. James has always said to us that the business is self-funding and it could grow that way. Now, admittedly, you're right, he's got his foot on more land and more developments than he ever has had before, but at the same time he's raised capital. Take Will's point that he's put money in, but at the same time, that's a deviation to before. So we prefer to sell for now.
Okay. PSC Insurance, the code is PSI, is our next stock. There's been media speculation around takeover activity.
Yep.
Buy, hold or a sell?
We're a buy. Yeah, we think that the business is super well run, controlled by the Dwyer family and a bunch of other insiders. And it's sort of like the sneaky third insurance broker in Oz. It's just that bit smaller than Steadies and Oz brokers that it's flown under the radar just that little bit. Not sure what's sort of attracted the corporate attention. I mean, it is a well-run business that's got enough scale to sort of pop up on global radars with not just the Aussie business but UK as well. So it feels like that's maybe that's just option value, but we really like the way the business is run. So yeah, it's a buy.
Okay. Well, the shares are up nearly 10% over the past 12 months. It's trading close to the top of its 52-week range. Buy, hold or sell for you?
Yeah, I'm a buy as well. It's one that we've held on to for quite a while and hopefully we'll be able to keep holding on to it. So the appeal of insurance brokers is pretty simple. Factors like low insurance sector profitability, the increasing cost of reinsurance capital, inflation, climate change, these are all pushing insurance costs structurally higher. And the insurance broker sector is pretty much a toll road on this growing spending without having the claims risk that the insurers have. On top of this, it's a pretty fragmented industry, so the sector can often make acquisitions that can drive earnings growth well into the double digits. So PSC or PSI, it's got a privileged business model, it's got insider alignment, it's got balance sheet for further M&A, and there's been corporate interest.
I've asked both our guests to bring along a founder-led company that they think looks attractive at today's prices. Will, we'll start with you. What's your pick?
Yes, so my pick is NIB or NIB, and technically it's not founder-led, but Mark's been there for over 20 years, and at the last AGM he said that 90% of his net worth is in the business, which is north of $20 million, so I think he's very aligned. Now, there's been a bit of noise around the sector recently with an NDIS review. There was some politicisation of the last premium increase, and there's been some press recently with private hospitals. But the key for NIB that you've got to remember is that if you look at the federal budget and you look at the 10-year growth forecasts of the major line items, the areas where the government expects the most growth, apart from interest, is healthcare and the NDIS. And I think NIB is the best way on the ASX to get exposure to the growth in this spending, whilst being at a high return on capital, also taking market share on top of this, and it only trades on the ASX's market multiple.
Okay, very good. Tim, have you got something better than NIB?
It's different, WiseTech. So WiseTech, I guess, is one of those classic founder-led businesses. Obviously, Richard White still controls 40% of that stock, which is pretty incredible. So what do we like? Again, we're looking for high-quality companies. This ticks almost every box. You could probably shoot some holes at it for capitalising their development expenses, but otherwise, super high margins, really strong returns, global growth. Digging under that, one of the things that we think is just an incredible position that the business is in is it's absent any major competitor. And we think this sort of sets it in really good stead as it looks to expand beyond its sort of core in CNF freight. So the opportunity for them to continue to grow, we think is actually underappreciated of sort of how far out these high quality businesses can persist in terms of those margins and earnings and that profile, that delivery. And so it looks like a special to us to beat their margin target in a couple of years and go on from there.
Okay, awesome. Well, folks, that wraps up our episode looking at founder-led companies. I hope you found a few ideas in that one. Remember, hit the subscribe on the YouTube channel. We're adding fresh content just like this every week.